moving forward towards our next panel discussion of the day, titled Digital Lending for Ease of Doing Business. In this session, panelists will talk about how technology like data lakes can support lending and in turn benefit businesses. For this session, we have Mukesh Mohan Gupta, President, Chamber of Indian Micro, Small and Medium Enterprises and CEO, NoteFalters.com. J. Sridharan, Executive Vice Chairman, Bharat Financial Inclusion. Murali Ramakrishnan, MD and CEO, South Indian Bank. Jatinder, Handoo, CEO, Digital Lenders Association of India. Santanu Agarwal, Deputy Managing Director, Paisalo Digital. And this session will be moderated by Asim Parashar, Partner, Financial Services Advisory, PwC India. Let's welcome our panel.
Hi, good afternoon, everyone. The audience is looking a bit tired, but we'll try to make it more entertaining out here because this is about lending. And everybody needs credit. Thank you. So first of all, let me welcome our esteemed panelists. There are industry veterans and there are young entrepreneurs who have joined and who are contributing to the credit and growth of the country. And when we talk about digital lending and ease of business, so those were the two things which had to be combined. Now, ease of business has multiple parameters, and we also have the ranking, etc. So we are not going to delve into that part of it, but everybody agrees that availability of credit in a frictionless, seamless manner is essential for the business to grow. Now, digital lending has been the buzzword, and in the earlier panels also with the investor and others and Google, we saw the videos, etc. So everybody is talking that India is at the inflection point and next 25 years is India's growth story. And I have been talking this for the last 5 years before COVID and also. So I hope this inflection point, we are able to cross it and embark on the growth. So, and we have seen that there have been multiple structures to provide credit across the country with urban credit, urban cooperative, district cooperative banks, NBFCs, banks, traditional banks were there. But the fintechs came and they tried to disrupt the whole process. Or I won't say disrupt, but they were trying to bring in something new, at least reach out to the customer and try to provide credit. The rates can be debated that how it was there. But that was the thought process, and the financial institutions have taken to that and have brought the digital lending. Now, when we talk about digital lending, there are different interpretations of it. RBI is also has tried to give an interpretation that what is digital lending, an app has to be there online and etc. But is it up to disbursement or is it only customer acquisition, or are we getting collections also in it, or customer servicing is also part of digital lending? So those are left open for interpretations. So now without much ado, I will leave it to the panelists to explain and share their thoughts that what it is, how it is. So let me start with, at the extreme left, Santanu. So what's your view, and this is an open question which I will go across the panel members. How important is digital lending in supporting ease of doing business across the country?
So if you look at India as a geographical play, and the biggest asset that India has is it's able to map out itself in a very good manner through postal codes. So if India was to be divided, not just in branches or states or districts, you can divide India into approximately 19,283 postal codes. Now, for any bank or any NBFC to just focus on all 19,023 postal codes just through a high-touch model, or even through a physical model, whether it be with BCs or whether it be with DSAs, is an extreme impossibility. There is no, in our view, there is no specific way or the right way or a right SOP can be placed in all 19,023 postal codes to service every single customer base there. If that is something that you need to do, then you need probably 10 State Bank of Indias to service that sort of a population and geographic set. So digital plays a way wherein you can use a singular structure with multiple product cycles or multiple product prototypes, and you can service all 19,283 phone codes with ease to the customer. And you can do as a lender all three checks fairly easily. So lending is a 3C business. We do credit credential and character check. So primarily the focus that is in the SOP which is in play right now with most banks or NBFCs is that they do credit and credential through a digital way, but they do character through a physical way. They would do a field inspection, or they would take reference, or they would just send some physical person there to do a character evaluation of that set. So basis on the new guidelines plus the data which is available, I believe that the digital way will allow a lender, a regulated lender like a bank or an NBFC, to tap into the entire set of 19,283 postal codes to give them access to credit, availability of credit, and at an affordable cost, like we were discussing. So not just the 3 C's of lending, but the 3 A's of lending can be tapped into with digital.
So thank you, Santanu. So the takeaway is credit, character, and credentials. So Murali sir, coming to you, and you have seen the banking industry grow, transition, ups and downs, cycles, books going good, bad, and everything. So what's your view on this? Is it really helping the customer, or is it necessary, or is it's just an extension of what we were doing and transitioning to it? Like Santanu said, 19,000 pin codes, etc., and do that.
Okay, let me start by thanking the organizers for giving an opportunity to share my views on this. As I look at it, I have 3 basic things to share. First is, I think digital has become imperative. If you ask me today, with the growing population in India, with the demographic which is more aligned to people in 25 to 40 age group, which is the one which is actually growing, and which is the one which is going to be consuming a lot of consumer assets and many other things. I think, and this segment especially is used to convenience, used to doing business or consuming services in their own space. Therefore, it is imperative. Now you can't think of a business model which is not going to include the necessities or the conveniences of this customer segment. Therefore, in my view, digital or technology intervention in this is a must. Second thing is, because it's something which is envisaged, the tech infrastructure which I think India has developed, the entire stack of tech infrastructure which you have developed, I think is a superior development if you ask me. There was a time when you go around Asian countries, you will always be looking at what Singapore had done, what Hong Kong had done, etc. Today, if you go to attend any seminar, they all look at what India is doing. That's a change which has happened in India, and this tech stack which you have developed, I think, is a excellent catalyst for the growth of this. The third thing, of course, is the growing per capita of the country, and any country which has seen their per capita crossing certain level, naturally the demand for financial assets will be definitely more. And as the life stage keeps moving up, a person who is buying a bike will want to buy a car, then he will want to buy a house, and he will go and set up a business, and therefore the needs of the consumers keep going. And therefore, given our demographic spread, etc., just to take on the point which he made, that you can't really physically access, I think digital is the best way to connect with these people. Apart from these 3 sort of factors which aid in digital lending as a big proposition, the way I look at it is, I represent a bank which is probably biggest amongst the small banks. I represent a bank called South Indian Bank. And when I look at it, I actually see technology as a great leveler, because today, when I need to compete with ICICIs or SDFCs of the world, I can't compete with them on branch network. I can't compete with them on the number of employees. I can't compete with them on the various other infrastructure which those banks are capable of having. But certainly I can give them run for money, because I can use the same technology and meet them in the marketplace. That's exactly what we are doing in many product lines today. Therefore, for a bank like us, I think it's a great boon, because it's a great leveler. So these are some of the imperatives I see for digital to really take a big shape in the days and years to come. Thanks.
So thank you, Murali sir. So you are saying that technology has enabled you to compete with the big daddies of the banking industry. So that's a good thing. Now, Jatinder, coming to you. Yours is an association, Digital Lenders Association. Now that is something very specific to this particular topic. So what has been your experience, and what do you think that digital lending needs as of now? We all have our views on that, but what's your viewpoint on this?
So thank you so much, Effie, for having me here and enabling us to represent our views. So first I'll begin, a little bit how digital lending, how it's evolving. And that actually, when I was sitting here, it reminds me of my early days in my State Bank of India career. So there was time, in about 20 years back, 25 years back, I could see literally, and I was in a rural bank, agriculture development branch. So I could literally see people coming, customers coming up bare feet in rural Telangana. And that was true in most parts of the country. Just 17 to 20% was the rate of financial inclusion at that point of time. And people used to come, 5 rupees coming to the branch, 5 rupees going back to the home. That is the fare, the transaction cost, and losing a half a day, And then there was a guard at the entrance, and you know how that the typical branch door is there, not even door, that's a closure. And the security guard used to stand, stand here, make a line. And those were the days when, it was a very tough banking. And then there used to field officers with documents. Sometime, because of internet failure, terminal is not working and people could lose their. So looking back, 20 years back, and I became from banker to a branchless banker. When I was in another firm, it was a branchless banking company. And then for a substantial, for last close to 1 decade, I was with one of the RBI recognized SROs for microfinance and now with the digital lending industry. So with that background, having seen this evolution coming so quickly and technology playing a very critical role in lending, and as a way forward, when we look at digital lending per se, let's not look it at plain vanilla product. Finance works very well when it is integrated with commerce. And when we look at the emergence, emerging protocols like OCAN, where, it will be completely digital, protocol where supply side players like lenders, banks and non-banks on one side and, borrowers on the other side with, API integrations. Then something like account aggregator framework, which has come up. RBI has issued, account aggregated NBFC licenses. So combined with that, and when it gets combined with the retail part of it, which is the applied, and somewhere, I was following currently World Bank chief, Mr. Banga. See, he said, follow the money. So if you follow the money gets, actually the finances and the lending piece gets, more exciting when it is in applied form, which brings me to the ONDC, the online digital commerce platform. So with these changes, and also not just that, on the supply side also, maybe I'm taking a little more seconds, but on supply side also on a customer level, ability to take informed choices. And when we say digital lending as an association being a custodian of the consciousness of the whole sector, we look it at more from the responsible lending perspective, and whatever it takes, maybe in the second round we can, I can talk about those things. But I think whatever it takes, we are there for promotion of those specific steps with our members. Currently, we are a small association with roughly around 100 digital lenders, which include banks, non-banks, LSPs, and other kind of enabling players with us. So this is how, I particularly have seen evolution from a banking customer to now with OCAN and ONDC and going forward. So I'll pause here, and that's what I have to say. Thank you.
Jatinder, thanks. And you brought in OCAN and other account aggregator, API integration, and then we have co-origination, co-lending, etc. It would have been good to have the customer also on this particular panel to see their viewpoint, that how much it has helped them. But coming back to you, Sridharan sir, 2 decades in the banking and now running Bharat Financial Inclusion. What has been your view on this?
Thank you. Thanks, Asim, and good afternoon to the fellow panelists. If you just look at things in perspective, finance and lending is one of the oldest industries in the world, and it has always adapted itself to whatever are the circumstances that are currently prevailing. And to a large extent, the the advancements in the society has impacted, and the adoption that the financial services industry does has what has made survive and grow. Now I just look back 30 years ago when small computers came, when I was in college, when computers came, there's a huge disruption among the bankers as to what will happen, will we lose jobs? None have lost jobs, everybody has lived with computers. Now without computers nobody does anything. Now what is the difference between a personal computer that came to the bank, then came the great wave of modern bank like us, IndusInd Bank, which came on day one with core banking, to what we have got today? Now, the inflection point in my view is that till we got the India stack fully developed, technology was being adopted by individual banks according to their skill, size, scale, the level of investment that they can make, and the product they can offer. Now, you have a stack like the Jandan Aadhaar Mobile Trinity, the UPI, and now the account aggregator network. What you see with this enablement is that the whole ecosystem moving from one form of providing service to thinking about the customer holistically, end-to-end digitally. So the greatest thing that has happened in the last 5-6 years, especially post-demonetization, is that how the digitalization of the economy is helping bankers and lenders to reach out to customers. Prior to that, if you look at, you will be doing one aspect. For example, some of the customer service can be supported by technology. Analytical work will be supported by technology. Some work that you will do in identifying who will be the next 100,000 million customers will come. So you are looking at individual pieces of what technology can do. But now is the time when we can think a customer holistically, end-to-end digitally. If you look at my own company, Bharat Financial Inclusion, which was an NBFC MFI serving the poorest of the entrepreneur. They are not poor people. They have a little less financial capital, but they have got an entrepreneurial mindset. They want to be an entrepreneur by themselves, and they need funds. So to that segment, when the entire industry was lending in cash and collecting in cash, demonetization happened. Within 6 to 8 months, the entire industry moved to identifying the customer through the Aadhaar, especially banks like us. Identify the customer through the Aadhaar. You don't require a piece of paper. You identify the customer. You have a connect with the credit bureau where you can look at her credit history both in the MFI bureau as well as in the normal retail bureau. You take all the data from her. You ask her to authenticate again with Aadhaar. You open the account on the fly. If the customer has got a bank account, we credit the money in their account, or otherwise we open. Now, the entire journey of a microfinance borrower today, or at least for the last 5 years in our case, is happening completely digitally at the customer's place, because you know that in the MFI world, the transaction happens in the customer's place in the center. Now, 4 years ago, we expanded that to another part of micro and small enterprises, really nano sort of enterprises whose capital requirement, borrowed capital requirement is in the range of 50,000 to 1 lakh rupees. We again go to them, have done the same thing. These customers do not come to the bank. I have got 1 million customers onboarded in my platform, in my business. They are all banks customers, we service them. None of them need to come to the bank. The relationship manager goes to them, identify their place of business, geospatially tag their line of business, their place of business, and take a photograph of that customer, take a photograph of the shop, interview the customer, record it in the tab, process of the loan application. Instantly an account is opened. The customer becomes a customer of the bank with a liability relationship. We're talking about digital lending. The 1 million customers that we have onboarded as the Bharat Super Shop, they are all full-fledged banking customers. They start the journey as a liability customer, that they open a current account with us, a recurring deposit with us. We give them a QR code through which they can capture the transaction. And after we assess their performance for about 4 weeks, we first make a lending decision and then we give loan to them. all of them digitally. Now, this according to me is the very evolved in today's standard, in today's time of servicing the customer end to end digitally because of the technological framework that is available. Having said that, when we look at digitally from our experience, a standalone app asking the customer to do everything by himself or herself, I don't know whether we have evolved to that extent to a large scale. So we still prefer tech and touch. All our customers are physically met. Every single customer is onboarded by somebody talking to them, but the transactions, the entire management is happening digitally. So just to conclude, Asim, in my view, digital is here to stay. I don't think any of us will have a difference in view. The thing is that how have we moved from a single organization or a single technology to an ecosystem getting built up? Still, we have not used the account aggregator this thing framework very well. It's a huge amount of work which needs to be done there. So I'll just end here. Maybe we'll catch up subsequently.
Oh, thank you. So two things. You are taking the bank to the customer, number one, and second, it is digitally enabled. So those are the 2 pointers which I can take from your view. Coming to you, Mukesh sir, because you are representing MSME segment, the chambers. Have we seen really a good impact or a neutral impact through digital lending on the MSME customer segment of the country?
Thank you very much, and I would like to thank Financial Express for organizing such a nice event. And the name of the event is Digital Bharat, not the digital lending. So, meaning thereby that everywhere digitalization is required, be it lending or be it anything else. So, that is one thing. I will try to answer it from a different perspective. See, what is the difference between the digital lending and the normal way of lending, wherein any customer goes to the branch, submits his documents, branch manager or the central processing unit or any officer of the bank, do the assessment. See, in normal bank balance sheet, banks do the balance sheet lending. So what was the system and what is the system prevailing as on today also when we do the balance sheet lending? So we see what is your capital, what are the ratios as per your balance sheet, what is the turnaround time of your debtors, creditors. So bankers will say, no, these ratios are not within our banking norm. Your current ratios are not good. Your total outside liabilities to total net worth or debt equity ratio is not good. As per policy, we are not able to fund you. He or she may be doing fantastic business, maybe earning good profit, but many a times these MSMEs are actually not aware of their own balance sheet. At the end of the financial year, their chartered accountants tell them that, see, this is the last date. You have to finalize the balance sheet. Okay, sir, you finalize, you send it, I'll just sign. If you ask from a normal MSME that what is the profit you have, what is the capital in your balance sheet, I can guarantee you, you can also vouch for me that very few MSMEs will be there who will be able to tell without seeing the balance sheet in fact. What has changed from the normal balance sheet lending to this cash flow based lending? Now everything is available online. GST is there, your PAN verification, your Aadhaar verification. We ask from the customer as a banker, which are the group companies you have? No need to ask them. You have a Ministry of Corporate Affairs site. Go there, see if they have the directorship in any other companies or not. So, to me, this digital lending has changed in fact from balance sheet lending to cash flow lending. I remember, I started my practice as a chartered accountant. और मुझे अभी भी याद है, there was a doctor in fact known to me. He asked me कि साहब मुझे एक गाड़ी का लोन लेना है. I visited a branch. अरे मैंने बोला मैं कराता हूँ ना आपको गाड़ी का लोन आपका. I visited a branch. Believe me, friends, I was not able to get the application form. This was the scenario, in fact, in days long back. But today, everything is available. No need to do some appraisal. No need to do see the ratios and other things from the balance sheet. May be correct, may be wrong, but the data available on GST, on the Ministry of Corporate Affairs site, other details are already there. So you can now do funding based on QR code, based on the transaction at your POS machine. So no need to go into those balance sheet funding and all those things. And perhaps the government is also understanding these things. Recently, you all will be aware they have started Jan Samarth portal, wherein the government is saying that, you apply here and it will be sanctioned online. There is a website called PSB Loan in 59 minutes where the in principle sanction is done digitally, because they verify all these things, your GST, your income tax return, the PAN, Aadhaar card, they verify everything and they assess that what the amount should be given to you as a loan. So to me, this has changed the way in a very different way, and more particularly what happens for these MSMEs. अभी मैं एक ब्रांच में जाऊंगा और मैं मैनेजर साहब को बोलूँगा, साहब मेरा एक एप्लीकेशन है, लोन को कंसीडर कर लीजिए. उनको लगेगा कि नहीं यार, इसकी शक्ल शाहरुख खान से नहीं मिलती, इसको नहीं देते हम लोन. It is his wish whether they want to consider my proposal or not. And there may be some genuine reason also. Kabhi there may be a concurrent auditor sitting in the branch. There may be an NPA issue in the branch. There may be some recovery problem. There may be some accounts where some CBA or some other agencies might have, identified some account और सब लोग टेंशन में हो बहुत ज़्यादा है. There may be a situation where the loan processing officer is not available in the branch. वो कहेंगे भाई कल आना, आज तो टाइम नहीं है हमारे पास. Next time when I go, there may be some other problem. वो कहेंगे 15 दिन बाद आना. बहुत जिद कर आके अगर मैं चला भी गया उनके पास, जबरदस्ती एप्लीकेशन दे दी. Where is the receipt of the application I have submitted to them? The manager will keep my application in his drawer. ज़्यादा मैं जिद करूंगा कि भाई साहब जरूर लेना पड़ेगा एप्लीकेशन, बोले रख दो, छोड़ दो. Next time when I go, maybe he is transferred. He is no more. So next person will say, no, we don't have any application. How can I know that when, on which date I have given my application to you and it's 2 months, 3 months, 4 months, whatever time has passed. हमने तो एक suggestions दिया है to the government. I was able to, Honorable Prime Minister has invited me into a very short group of only 8 people at his residence to share my views on MSMEs and lending and all those things. We requested the Honorable Prime Minister and we suggested it to the government, offline even application submission system should be vanished off. ये खत्म करिए, because digitalization will start when my application is into the system. अगर मैं अपनी एप्लीकेशन ही सिस्टम में नहीं सबमिट कर पाया तो डिजिटलाइजेशन विल नॉट हैपन. सो वी हैव रिक्वेस्टेड कि आप इवन इन ऑल पब्लिक सेक्टर बैंक्स आल्सो यू से दैट नोबडी इज रिक्वायर्ड टू गो टू द ब्रांच इवन टू सबमिट द एप्लीकेशन. आप जितनी भी है, इवन इफ आई डोंट हैव द कंप्लीट documents, because there is a long list of documents which is required for the physical submission of loan. Even if I submit a letter, साहब मैं एक पान की दुकान चलाता हूँ, मुझे 10,000 रुपए का लोन चाहिए. I suppose this should be a perfect application. Now it's up to bank. They should do the due diligence. They should invite me. They should ask my any questions. In fact, they want to ask. But I may or may not be as expert as submitting the financial records, financial details, whatever is required by the bank. So to me, yes, digital lending is definitely going to be future of the country. But I also believe that human intervention will also be equally important. So to me, yes, origination of the application should always be digital. Maybe later on the digital process definitely will continue with some human intervention, because where are the land records online as on today? So land records are not online. उनका हम कैसे हम उनको verify कर सकते हैं from sitting digitally? I suppose the process is going on. But कैसे हम उनको देख सकते हैं कि yes, this property which has been offered by me as a collateral security actually exists or not? Have I given the right location? Am I the actual owner, or this is some forged document I have submitted to the bank? So perhaps many more things need to be done in this digital lending platform.
Thank you, and thanks for that passion. And that's a radical idea that all application in bank should be online. So hopefully there will be some roadblocks, but that's a good idea which can be suggested. Now, Jatinder, I am coming to you because you are part of the association. The role of SRO, self-regulatory, and what is in it for the customer? Because we are all talking about digital lending and credit to the customer, SME, ease of business, data is given, technology is given, enablement is there. But still, I think customer needs more.
Yeah, I think thanks for asking this very important and critical question. You know, as I said earlier, associations as an SRO, and in fact, you know, there are two RBI regulated industry associations in microfinance sector. And we genuinely hope and expect, you know, RBI recognizes, and actually RBI has expressed its intent in different publications, working group reports. And we expect RBI to, you know, come up with guide, recognizing industry associations as SROs. Now, as far as role of SROs is concerned, as I previously mentioned in the first round, industry associations and SROs are custodians of collective consciousness of their members and the market, and the prime responsibility in addition to, supporting their members on capacity building and sensitizing them on adhering to the guidelines whichever are there for different regulators, especially the banking and finance regulator RBI, is towards the customers. Customer centricity and customer protection is an important aspect. Whatever we may say regarding, regarding digital lending and its potential growth very fast, there are different numbers which I don't want to quote here because there are different reports and different ways, I don't want to get into there. But specific role of a SRO, of an industry association being an SRO, is very critical from customer centricity and customer protection point of view. Making customer educated about, her rights, in case if there are any grievances where she can go, facilitating, her to reach out to the appropriate levels, that's a part one. But at the same time, also building capacities of its members to, catch up with regulation if required. Helping members of SRO who are, industry players to, align with the RBI guidelines. In case if there are any non-compliances on the field, regularly apprising regulator, because regulators also have a limitation. Although we are very thankful to Reserve Bank of India in this country, Reserve Bank, I would, I can take a liberty on behalf of our banker friends and others. Reserve Bank of India in this country is a very benevolent regulator, very progressive regulator, and it listens to the stakeholders, whatever, rules or whatever regulations they come up with. In this limited framework and within the paucity of time, I think I should pause here, but this is the broad contours of a roles of SRO in digital lending. Thank you.
Thanks, Jatinder. Murali sir, one question. In the complete lending value chain, what is one thing where still digital is okay, it has not reached that kind of maturity?
Yeah, I think digital has seen substantial progress in the areas of payment, in the area of consumer lending. I would say that digital has made a fairly serious dent in the lower end of SMEs, where you are looking at funding of not more than 2 crores, average funding of 1 crore. But when you actually look at the higher end of SME and corporates, large corporates, I think I would say that there is still a lot of things which we need to do on the digital area, because today even in a large corporate appraisal, even as we are talking today, though many things have been made available now with the SMA categorization, CRILC, which we can check, bureaus we can check, rating institutions come up with the rating of various corporates, etc. Lots of other things have been made it little easier, but still the essence of how much to lend and who to lend and in what form and shape to lend, and particularly in the larger end of corporate, when you look at project financing, where you are looking at a long-term lending for 10 years, 12 years, etc. I think we still have a long way to go in terms of digital playing a role there. Because all said and done, when you are funding a project of several thousands of crores, obviously you need to do a lot more due diligence in terms of viability and many things which we need to sort of assess as to what will happen in the economy, what will happen to the various factors, supply, demand, where the competition can come. Given the way I think the world is moving today, competition can come from any area. I mean, it's not necessarily from your own space. It can come completely from outside of your space too. So I think big change has to happen in that part of banking is what I feel. Of course, even in corporate banking, if you look at areas of in corporate as well as in SME, if you look at areas of discounting, bills discounting and those kind of things, I think lots of platforms have come today. And today, SMEs have also got the advantage of being discounted at a very fairly competitive rate by banks bidding for it. I think those are all really developments in the right direction.
Thank you. Santanu, one last question for what should a fintech lender should not do based on your experience of building the books?
See, India as a country is on a tipping point right now. We have 130 crore people. Out of 130 crore people, roughly 4.2 crore people file income tax. Even if it is a nil return, 4.2 crore people file income tax. Against that, we have a unique credit database of 7.5 crore people. Although all the credit bureaus combined, they say they have 15 crore, but there is a Santanu Agarwal in all four of them. So it is roughly 7.5 crore. Against this entire number, the country has issued 42 crore PAN cards. So why this 42 crore PAN cards? This has happened because when I would say a pure play micro SME goes to a bank or goes to even an old NBFC or a cooperative bank and says, मेरे को 25,000 रुपए का लोन चाहिए, तो वो कहता है कि the manager there, the RM or the BM or the BO over there says that income tax भरते हो? नहीं भरते, लोन नहीं मिलेगा. Right, so a self-employment opportunity started in India when if you go on say Sansad Marg, you will see players sitting on the street and say 50 रुपए में PAN card बनवाइए. And they sell this PAN card saying that अगर तुम्हारे पास ये PAN card है तो तुम्हें एक regulated entity से loan मिल जाएगा. This entire market translates to roughly 8 lakh crores per annum. So what a fintech lender should not do, in my opinion, is not enter a space without being regulated properly. I feel right now the biggest disadvantage that India holds is that the fintech space, especially the startup space, is extremely unregulated. And for a space which is banking on the consumer data, the population data, the credit data, the character data, the credential data of the Indian general public, I think this space needs to be highly regulated like that of an NBFC or a bank. And right now India is in a moment which is at a tipping point. So my thing is Bharat ab rukna nahi and RBI ab rukna nahi.
Thank you. And I would like to thank the esteemed panelists. 35 minutes was quite less to kind of discuss this particular topic. But why did I ask you this question is because we have faced a similar problem. So in digital lending, it has been refused to certain customer that credit has been refused, but he goes to the branch and he has got the credit. Same bank, two different channels, different results. So these are the few things which has been happening practically. But with that note, I would like to thank our esteemed panelists and also Financial Express. If there is one question which you would like to ask our esteemed panelists, then that would be there. Else we can close it.
Thank you, panelists. I think you were very articulate and the insights are really interesting. I come from Kotak Bank. Very interesting to hear what you just said. I don't have a very profound question as much as the insights you've shared. I was just wondering, with the transition from traditional banking to now, traditional lending to digital lending, has it had an impact on the NPA?
Sorry, can you speak a bit louder? I couldn't NPA.
Could I?
NPA.
Okay. Is this better?
Impact on the NPA.
The transition from traditional lending to digital lending, what is its impact on NPA?
See, just because you are changing the way you are delivering your service doesn't take away the basics of credit. Credit appraisal, credit assessment of the customer has to be strong for you to have a good portfolio. I think what fintech, all this infrastructure development which has happened in India is, it's made little more easier now. For example, there was a time when I used to be heading credit, for example, when I need to check the credit history of the customer, practically you will have to go and ask the formal lenders to see whether this customer has been paying you well or not, etc. Today, there is no, we can just ping a bureau and you will get the full data. And today you know what is the total exposure of a customer. Today you know which all properties of the customer are mortgaged to which lender. Everything you will be able to get it within no time. Plus you have more agencies available which are also looking at creditworthiness of the customer. So I think the ease with which you can assess a customer for his ability to pay, for his intention to pay, for his liquidity to pay, etc., I think you have more tools than what we used to have earlier. In that respect, I think it's made the credit underwriting a lot more easier. This is on one side. The other side is, Data now helping you to come with credit models. Like even in our own bank, we have built credit models for underwriting home loan, LAP, personal loan, smaller end of SME. We have built credit models. And today you have data available to build those models. And you have history available to statistically check your models, whether your models are working or not. So when you onboard customer today, you have more tools than in the past to look at how well you are building your book. If you are drawing a vintage curve for any of a retail book, you will be able to know month on books on one side, delinquents on the other side, you know how your portfolio is moving. I think technology has made sourcing, underwriting, monitoring, everything a little easier. But the fundamentals of who you to lend and how much to lend is still something which we need to develop as a credit person.
Thank you, that helps. Does fintech also share the same perspective?
Yeah, absolutely. So let me give you an example. When we transitioned from postcards to email, we never stopped communicating. It's a similar story when it comes to credit underwriting. What we have done is we have taken credit assessment matrices, which are called CAMs, and transitioned them from a CAM which is prepared by hand to a BRE, which is a business rule engine. So it has not affected the underwriting prospect. I feel that what has happened is, especially in the startup world, people have started focusing on the entire lending space as a disbursement model and not as a recovery model. So people have started focusing too much on either a top line or a valuation game rather than on a recovery cycle. A lender only survives if the recovery of money is there. So that is the pure play first thing. And to add on to Sir's suggestion, lending at the end of the day is always dependent on two things. Apart from all the BREs and all the credit metrics, is the ability to repay and the intention to repay. As long as the intention is there, the ability will never get hampered. But if the intention is not there, there is no way your ability will allow you to repay. So these are my two things.
That really helps. Thank you so much.
Thank you. Thank you, everyone.
I just want to add only one thing. We are talking about ease of doing business. Definitely digital economy, digital technology will do ease of business. But there cannot be easy credit. Credit always goes with a discipline. The borrower should have a discipline, the lender should have a discipline. This is not an industry like the consumer retail industry where people ratchet up so much of losses and they're in business. In financial services, you should not lose even 1 rupee on every single deal that you make. So that is the discipline which we as responsible lenders should educate our customers, and whether we are a digital lender, fintech lender or a bank. So that should be the mantra. I mean, I don't think Ramakrishnan very clearly established that. Yeah, thank you.
Thank you. Thank you. I'm sorry for that.